Good morning. This is Larry McMillan with a stock market update on Monday, October 14th. Today is a partial banking holiday, but not a stock market or federal holiday. Regardless, S&P is up again to a new all-time high, and it's beginning to press up towards that +4 standard deviation band that we've talked about from time to time as being a potential target. Right now, that's about at 5860. And it is rising daily. So when the market goes up, so does that band. That's a 4 standard deviation band. But overall, the market seems very healthy from looking at its chart. S&P making new all-time highs, and that's leading us to continue to maintain our core bullish position. When we look at some of the internals, they aren't necessarily all that great, but we'll discuss them individually. The McMillan volatility band buy signal, that's still in effect, and that also has a target of that 4 standard deviation band on the upside. Equity-only put-call ratios have fallen dramatically. Put buying has dried up to a great extent. And so these are very overbought, but overbought does not mean sell. So the put-call ratio, the standard put-call ratio is actually down to the yearly low, which is also equal to the low right before the last bear market started. And I'm not trying to imply that this reading would indicate the next bear market's about to start. It's just a data point. The weighted ratio is also low, but it hasn't quite reached the 2024 lows yet. Breadth, however, has been pretty bad. I mean, there's been days when it's been decent enough to reverse what looked like a sell signal last week. But even today, with the market up quite a bit, advances and declines in the New York Stock Exchange are running about even. So that's one, minor thing that could branch out later to be more of a problem. But new highs have continued to expand at a great rate, and they continue to dominate new lows. So that's bullish for the stock market as well. When we get into the volatility picture, things are a little bit different because right after the election, the SPX options are quite expensive. And so that's inflating the price of VIX and also distorting the term structure of the VIX futures and the term structure of the CBOE volatility indices. So they lose their predictive value when an event takes hold, and this is an event just like earnings might be for a stock. And so the overall picture of VIX is one that is still bearish in the fact that we've got our VIX trend to VIX sell signal in place, and that's going to remain in place as long as VIX is above its 200-day moving average. In addition, though, we are still looking for that VIX spike peak buy signal that would occur today if VIX closed below 20.14. So the picture is a little bit distorted in terms of volatility, but so far the market participants have not backed off from their expectation that the market's going to be volatile right after the election. I'm not exactly sure, no matter what happens in the election, why that would be the case. It normally is not, but that's what people are looking for right now. Overall, as I said, we're maintaining our core bullish position. We are taking partial profits and rolling in the money calls upwards as they get deep in the money. And we will trade any new signals that come along. I invite you to visit our website to take a look at our daily publications where we follow these same indicators in a more timely manner. And meanwhile, have a great week trading.